Oh, good morning. Welcome to Friday, June 13th.
Friday the 13th. And what a
Hey,
Friday it
wow,
is.
that's a little creepy.
Absolutely.
Oh,
Good morning from Chicago.
good morning.
Good morning.
What's the
It's going to be an
temperature in
interesting day.
Chicago?
It's 61 right now, but it's gonna be like 71 and raining today.
Oh,
Partly
Yeah,
cloudy right
Oh,
now.
the
okay.
temperature
it was
was
hot and
nice, but
sunny
the
yesterday.
rain, no
Well,
thanks.
Rain's I can feel it in the
you know,
bones.
It's in your
what
bones, huh?
about
Yeah, we're at 64 here.
30?
We're going to 90.
That tells me something about your age. You can feel it in your bones.
Yeah.
I don't know. I just turned 60.
Oh, you're young.
All right.
The news just because of what's
Co-
going on. And then
Come
looked at
on.
my stock portfolio. I
Hold
said,
on.
okay, not too bad.
Okay. Got
Last
it?
night,
Why is that not muting?
Got it? It sounds like it.
Yeah, I think I got it. Go ahead.
Okay. All right. Well, welcome to Friday the 13th. I was just telling Trent, I'm glad it's Friday. I could use the days off. Um, Yesterday, I talked about, the markets were just kind of, again, waiting for something, as either due to trade or some geopolitical. And I said, there were rumors out there that through the markets that Israel might attack Iran, and overnight, that's what happened. They took out nuclear sites, they took out nuclear scientists and military leadership. And the way it sounds is going to continue on. I think Israel said this will continue as many days as it takes. So with that, we're seeing energy stocks up along with defense stocks. And, I always say I try to get out of my swing trades before the weekend because of weekend risk. I think weekend risk came one day early. So right now we're looking at the markets. They were last night when this all came out, they were down 500 points. And now, earlier it was just 410, and now we're down 388. Crypto went down. The crypto trades 24/7, so you got to see crypto go down in real time and didn't have to wait. But it came back up, and we'll take a look at that in a second. But Dow's down, S&P's down. But when you consider what's happening, that's not too bad of a fall. When you think about it, oil's up again, and the treasuries are up. And just when you think it's over, we do have uh, the 250th anniversary of the U.S. Army, so we're going to have a military parade this weekend, and to counter that, we're going to have a National Day of Resistance also on Saturday, and then Sunday's Father's Day. So happy Father's Day! And so it's going to be a busy weekend. Probably be a good one to sit on the sidelines, like I try to do on swing trades, because a lot can happen, especially with what's going on with Israel, and we'll see what happens. I haven't seen too many replies yet on what's going to happen. It's still early in the morning here, but we'll see. Okay, let's move on. So here's the SPY S&P 500. And we've been bouncing along resistance up here just above the 9. And today we're going to open, well, when I looked at it a half hour ago, right about at the 9. Okay. And again, we saw this was when it was at 400 under, and now we're 300 something. But anyway, we're still having trouble resistance. We're still kind of sideways in our patterns. We were opening up a little bit on the Bollinger Bands, but we'll see what happens. Not how it opens, is how it closes, like we always say. The Dow, really under resistance here in the Dow. We're going to open, below the 9, it looks like. Again, same pattern on the Bollingers. We were sideways, and a little bit of an uptick. But again, here we have today, and we're going to open below the 9 according to what I saw in the pre-market earlier. And the Qs, Again, riding right along resistance. We're having a little bit of an upper Bollinger move up, but again, we're going to open below the 9 here, and we'll see what happens. But again, sideways uncertainty. I'm surprised, really, with bombing and taking out nuclear facilities and taking out nuclear scientists and all that we aren't seeing more of a reaction on this. I'll let Trent look at the VIX later to see what the volatility index is. I'm sure it's probably over 20, but I haven't really looked at it yet. With that, when I looked at gold this morning, gold was moving right along resistance for a while. Now we're going to open up right along the upper Bollinger Band and underneath where we have sell orders. So gold will pop up a little bit. Silver's had quite a run. And when we look at silver, it came up, it's hitting resistance. It's going to open up a little bit lower this morning on silver. So again, that was a nice run on silver. We have a gap here that probably needs to be filled. And we'll see what happens with silver. Bitcoin. So Bitcoin closed yesterday down, okay, and it closed, and it's 24/7, but it does have a 24-hour cycle. I closed it 103,712, but today, it's popped back up. Now we're above 105 again. So now we've come down, we've been under this level, what used to be support. Now it's resistance. So we're bouncing between the 50 and this support level, and then right above it, or resistance level, and right above it's the 9. So we'll see if it can get some more traction and move up, but the oscillators aren't looking like they want to let them go. So, we've been at this upper band before, here, so we could run sideways until it breaks one way or the other. But either way, we've got two moving averages converging on each other, and something's going to be come out of that for sure. Let's just look at a couple of these. NVIDIA again, right along resistance. Chart looks just like the S&P and the Qs. We're going to open just above the 9 here today. Again, says it's going to be a little bit, lower. We'll see what happens once the market goes and once the news comes out. Palantir, again, straight right along resistance. Tried to get up, just couldn't get past it. We're going to open a little bit lower, but still above the 9. You see, you got the 9 and the resistance coming together, and that usually means kind of a downward turn, but not always, but usually. Our last momentum stock finally hit its match on the intermediate resistance level. It was a nice run on NDAQ. We put it on the list here. 2 days in a row hitting resistance. So especially with what's happening today, we'll probably, if you have some profits, you might want to take a little off before the weekend on that one. Under the 200 did really well, until, today. We had, just to look at it, Whirlpool, we're up $4.53 as of yesterday's close from when we put it on Monday. EOG, we're up $6.59 since we put it on the list. It just goes down. Lilly, again, these are going to open probably lower. Lily's gone up. We've got some resistance. So we were up about $42.16 per share on Lilly since we put it on the list. Amgen, we were up about $11.70. It's come up. It's hit a little resistance on the 200. We'll see if we can get above it and back test it. And if so, you might see Amgen continue to roll, but it's going to have a little bump today, I'm sure, just due to geopolitics in the rest of the market. AES, we were looking at AES. A lot of you guys, still kind of a nice run up. We were up about $1.58 for the week. FMC was on the list last week, still on this week. Came down a little after it hit sell order resistance, even with it coming down from where we got in. We're up about $2.74. AMAT, again, these are under the 200. So AMAT actually got up and got above the 200, kept above the 200, and now it's kind of going sideways along the Bollinger Band. But we're up about $8.26 from where we started at the beginning of the week on AMAT. NTAP, this one was down a little. Okay, it never really got some traction, so we're really down just from the time we put it on the list, 72 cents. And then LW, was on the list for last weekend, this week. And LW, we're up about, even with that, sideways kind of movement, about $1.20. But you could have gotten out, when you hit support at the 9. But you would have missed out on a little bit of profit. But still seeing the Bollingers move up. So, good moves on those. We talked about a couple days ago, that oil was going up, and now it is really going up. But we talked about APA, and that's up about 3.5% since we put that on the list a couple days ago. You're going to see all these oil stocks go up. LHX, if you look at like a defense play, okay, this is L3 shares. It's rolling right along the 9. Then we have today's news. You see it's going to open up above the upper Bollinger, so it might pull back at the end of the day. But we're going to see this. We're going to see Lockheed Martin, probably Northrop Grumman, all go up today. On our watch list, at Riot. Riot did a nice run up. It's got finally back inside the Bollinger 1, 2, 3, 4, 5 inside the Bollinger Band. MCHP we have, again, all these will be affected price-wise by what's going on in the market right out of the gate. Again, came back within the Bollinger Band. When we look at some of the other stocks that are popular, we talked about this week. We talk a lot about CoreWeave, and CoreWeave has come up and then kind of gone sideways, right along resistance, came back down, closed right at resistance, going to open within below the 9 a little bit today. But still, CoreWeave has hit resistance, but it's still within, the upper Bollinger in the 9 at this point, even though it's hidden sideways. GEV we watched. And this had some news that brought it back up a little bit, but still just couldn't get past resistance at this point. We're going to open up a little lower, just like everything else. But we've had these patterns sideways before. The difference that I see is when we had these sideways patterns, we still had moving up Bollinger Bands. We still had moving up 9. And in this case, we've seen the 9 roll. We've seen resistance come on. We're seeing convergence of the Bollinger Band. So just keep that in mind. UNH had a nice little bump yesterday, but it's going to come down, open up a little lower. But it's right along the upper Bollinger Band. I want to see it try to challenge that Bollinger a little more. And I want to see the RSI get up more towards 50 to get some more momentum. But, we're still watching UNH to see if we can get that to go. But if it does go, could be a good runner for us. And I know some of you have gotten in on it, trying to preempt it a little bit while we're going right along this support level. And the support was at 300. So if you got in, you're up about $18 at least as of close yesterday, right along the upper Bollinger Band and right along the 20, which is providing some resistance. Oracle, I know some of you were in this, had earnings yesterday, nice little gap up, nice little pop up for Oracle. It was a nice run going that way. Again, I would have gotten out before earnings and I would have missed all this, but I would have probably taken that gain anyway, as a swing trader. But for you investors who are in Oracle, congratulations on that one. That was nice. We looked at McDonald's yesterday. McDonald's came down. We said we got to watch and see if we can maintain the 200. Yesterday it did close above the 200. We'll see what happens today. But if this can maintain this 200 and we get the 9 coming down and start rolling back up, we could see, this could be the bottom of this, and we might be able to see some price action move up. But again, with what's going on today, the unknown market condition of the Israeli bombing of Iran, we'll see what happens. All bets could be off just because of news, and we're used to that now. IREN has come up. It's hit resistance 4 days in a row. And yesterday couldn't get quite past it. It tried to, got beat back, after it hit the upper Bollinger Band. We'll see what happens. But again, it's tough to get past that resistance. What else? TEM. I think Patrick brought this one up. Resistance, another day, hidden resistance on TEM. Again, it's just hard to get past. We've had this before. And what else do we have? Oh, I just wanted, you'll see XOM. ExxonMobil, it's had a nice run up. And then today, yesterday it closed at the upper Bollinger Band. Last time I looked, we're going to open way above the 200, so it's going to gap up a little bit because of this conflict. So again, I think that's about what I got. Oh, let's look at Boeing, just because of the plane crash. Let's see what happens on Boeing. You see Boeing was already kind of flirting with resistance. We were seeing a sideways pattern, and after yesterday's crash of the 787, it dropped down. Didn't quite go down to the Bollinger Band. It's under the 20. We'll see what happens today, but it doesn't look good for Boeing. It's got a lot of upward resistance plus the news. So Boeing may be something that if you're in and you have a good profit, you might want to take a little bit off, but not financial advice. I'm going to turn it over to Trent now and get Trent's
Right.
view on what's going on.
Everything's peachy keen.
Awesome.
So this is the S&P and the VIX. S&P options are basically pinning, if you use SPY, $595 to 605 is the range, as we have talked about for the last handful of days. We're back in this range that we were in back February and the previous months. The VIX did jump today with the news of Israel and Iran, and opened up at around 21, but presently is at 20. Remember, 19 is your line in the sand between investable and chop bucket. So with volatility sort of opening high and right now presently lower, um, there is a likelihood that we will see volatility fall again, and SPY in this case, or S&P 500, will close within the channel that it's in and continue to move up this 15-day moving average. As you can see, volatility can be a leading indicator to when you see a turn. You can see that we crossed the 15 back on we touched it and then closed below it on April 15th, and bounced around for a couple of days and then started its trend downward to where we were yesterday. And you can see it sort of front ran the S&P 500 and the move there. So volatility, the VIX can be a leading indicator for you in the future as you're looking at markets and trying to determine between where the S&P 500 is headed. I wanted to hit upon a couple of Kerry's tell sheet stocks that I sort of sparked my interest. And I'm going to try to do this on a regular basis. Had a nice conversation with Kerry, of course, very energetic conversation a couple nights ago. I was up in Birmingham, and we like the idea of combining both his view fundamentally, the technicals, and bringing them together. So I'm going to try to do that every week and give you guys a 12 list that I look at that I consider are more intermediate to long-term type opportunities. So the first one is ABV. Presently on using my system, we're above the trade trend line, which is the white line. We're above the 200, which is the red, and we're above the intermediate trend. Looks like we're going to open up just right above the intermediate trend in 200, but we got some selling pressure here. But if we could see a break above $195 here, we could see a move higher into the upper or low end side of the 200 range. So I'm keeping an eye on that. Relative strength here is strong at 59. I want to see that continue there as well. Relative holdings, similar situation, above the 200. It's sort of the baseline, above the intermediate and above the trade trend. Now, we're in this consolidation or accumulation phase, I believe. What I want to see is this intermediate trend line continue to approach the 200 day and the trade trend line to be support as you see accumulation here. It's sort of you can see between the red and the green, there's a fight going on. And if we could see a break above, say, let's just round it to 116, we could see some air time to the north here in VRT. And then I go down here to Comscope Holdings, similar situation above the 200. above the trade trend, but there is a excuse me, a lot of resistance here because there's been selling there going back to March of this year, early March of this year. What I want to see is this intermediate trend line make a move through the 200, and this 15 or trade trend line continue to be a level of support as we potentially see some accumulation here. Relative strengths at 65.54 today. That's encouraging. But I want to see that strengthening, and presently trading at $6.33 as of yesterday. Looks to open at 620. So something to keep an eye on. But this is resistance. We just need that continued momentum to push this higher going forward. ASML, we have seen it break above the 200. That's really nice. The intermediate trend line still trades below the 200, so I want to see that come up and come through. The trade trend line is still has been gone from positive or negative on June 3rd to positive. Let's see here on what looks like the June 6th, and we've made a move higher. There looks like to be support in this area. You can see that back in May 14th. And then back here, what was once resistance back in February, January, and so on, hopefully is now going to become support. I'd like to see a hold where it looks like to open up at $771 today. I'd like to see it hold that and close higher above that today, which I think with the circumstances, we could see that. Pardon me, relative strengths at 68.39. So that's encouraging there. And ARM holdings, I like this because it's above the 200. The 15 is starting to move through the 200, and the intermediate's following suit as well. Looks to open at 136.94. Hopefully, my anticipation, this is going to be a support level. But once again, we've got this fight between sellers here and buyers here. And so it's a matter of time who's going to win. What's a little discouraging is my RSI is turned. It seems to have hit a level of, we'll say at 65 and then turned south a little bit. So let's look for strength there, but this could be an opportunity of accumulation for a while and then possibly a move higher. And fundamentally, that could be what pushes it higher. It could be a news story of some collaboration with another company, something. But this is something I'm keeping an eye on. And then my pie in the sky stock on the tell sheet is Ultra Clean Holdings. Presently trades about $10 below the 200, but has crossed my trade trend line, which is my first indication of this stock moving higher. It's trading now also above the last 1, 2, 3, 4 days above my intermediate trend line. Still has weakness, a little rounding here in the RSI, but above 50. That's encouraging. And there is resistance here in the 20s, just say 23 to 26 range. If we can see this accumulation, some institutional buyers buying into this and a break above 26, it'd be a nice move to the 200, and then if you can get through the 238. So pie in the sky, but take a just keep that in mind. Still a lot of sideways movement in this stock, but that's what I got there for that. I'm going to put together a 12 list every Sunday of Kerry's tell sheets of his ideas and his watch list, and approach it with my approach with the intermediate and long term. And for those who are intermediate and long term gamers, this could be a helpful way to look at the tell sheet and how Kerry looks at stocks. So I think Mike had something he wanted to share.
Oh, hold on.
Okay.
Hold on. I got two charts that people want to look at. Then I want to send it over to Mike. Mike has some stuff he wants to look at, but I'll do this real quick. And one was GE. And then Esther wanted to look at MP, which are two good ones.
Okay.
So GE, we had a nice run on. I'll come up here in a second. Right along the 9 in the upper Bollinger Band. We used to have resistance came on right up here pretty much, and now it's moved down as we've seen stock price on GE come down, and it came down a lot 3 days ago. Right now we're sitting right at support at the 20 and resistance here at 242. Your oscillators are turning down, so it's just not a. This came up at resistance was up here till it recalculated, and again it was right along the 9 and parallel to 9, and we knew what happened, and now it's resistance has moved down. We're going to see it open up a little lower again on GE, so it looks like
That plane
at least
had
the
GE engines on it.
yeah, that's part of it, but it started going down before that crash too, but that's not helping the situation. You're right, Bob. So GE may be a good time if you have a good profit in it and you're trading it. It might be a good time to think about taking some off and having some lobster and wine and champagne this weekend on General Electric. So
But
MP.
just so you know, the theory behind that plane crashing, the co-pilot threw the lever for the flaps to retract and not the landing gear.
Oh,
That seems to be the theory, so it lost its lift. There was
Yeah,
no issue allegedly with the engines. It was, right when they get off the ground, they have a positive, the co-pilot reads positive. They lift, at that point, they lift the landing gear, but the landing gear never got lifted. So
Oh.
that's when it started to just pan in the air and go down because they feel that the co-pilot threw the wrong lever.
You mean like
Wow.
human error?
Yeah,
Did you
Yeah.
see the video?
yeah,
It's sad, isn't it?
yeah.
Yeah.
Well, if you watch it,
I-
you'll see the landing gear is down. It should have been going up at that point. And the question is, they're looking for forward pictures, which would show the flaps.
They probably
So-
they'll probably get the black box at some point and hear what happened in the cockpit, I'd imagine.
So the gear on the video the landing gear never retracted?
Yes.
Oh, boy. Okay.
Yeah.
Well, I mean that's not a bad thing. It's the bad thing is when he threw the wrong switch and the flaps.
Well, that
he
is the
screwed
bad
up.
thing because you have all the drag. The
Right,
reason why they
exactly.
bring that gear up is to get rid of the drag and you get more lift.
That's sad.
Yep.
So instead, you had a double whammy. One, you had the
Double.
flaps retracting, and you had the gear down. You're going down.
Yeah.
You could
Well,
see
you
it.
have the most weight of all when you take off because you have fuel weight and you have dead weight.
Mhm.
It's a spooky video you could see on YouTube.
I don't know
Yeah,
if I'm gonna
I
watch
saw
that.
I saw what looked like on the ground. It didn't look
Anyway, I
good.
just wanted to make a comment on that. It doesn't seem to be that it was the engines. It seems to be that it was human error.
Okay. Okay. Moving on to MP materials. This is our rare earth. We talked about this a long time ago in Kerry's group, and this is a rare earth company out in California. And with the Chinese blocking rare earth, they have the most in the world. This company has come back into favor. You can see a nice run up, and then yesterday it really caught fire, went right up and hit resistance. After 1, 2, 3, 4, well, it kind of went down. And also it's kind of wick down, but you've got some momentum rolling on MP. Now, how much further it's going to go, I don't know. We've hit this level before, and that's a big old candle too. So it encompasses a lot of days of candles. So be careful if you're going to chase this because you do have resistance and you do have sell orders right above that. It is Friday, and we'll see what happens. But that would have been nice to kind of get in back in this area and ride that up and potentially cash out a little bit and get some cash on that. But you can see we rode the Bollinger all the way up, go up above the Bollinger, back to the Bollinger, up above the Bollinger, back to the Bollinger, up above the Bollinger. So we'll see what happens today, especially with what's going on. But yeah, that was a nice run on MP. So let's see, I'm gonna move it over to okay, we did MP. I think Mike had something. We were talking yesterday with Mike, and I brought up my favorite index fund is ITOT, and it handles all the S&P of 500 kind of, it has 2,500 stocks in it. And then so Mike asked if he could look at put a screenshot up and a chart and give us some thoughts on that. So Mike, are you ready? Mike
Yeah,
here?
share, Trent, if you could share.
Yeah, hold on. Yeah, you should be able to.
Can you see that?
Not yet.
No, not yet.
There it goes.
Here it
Not there
comes.
yet. It's coming up. There you go. You got it.
Right. Anyway, within these indexes, you're seeing a pattern that stands out on a daily basis over the past 2 months or so. If you see this, let's see, where is it? This is the 12th. This is the first thing in the morning, right here. It's long red candle.
This is a 5-minute chart, by the way, guys.
Yes, it's a 5-minute chart. If you go into the extended hours, right here at this point, this is your algos hitting 7:50 in the morning. It's a long candle. Next candle up is a doji at this level, 130.63. The next 5-minute candle is up again, but the sellers won here. The pattern is the hour goes by, it's telling you the long candle, long wick, it's telling you it's going to be a positive opening. Opens up, and you can watch it go straight up. And the candles tell you it's time to get out. This is a day trade. And the way to tell when to get in and out is by using your RSI. Just your RSI. I tweak it to add it to 15-day period, which smooths it out a little bit. Every time there's a cross, see here, there's a cross down here. It's at a big dip. It's been oversold. That long candle, momentum starts going up. The small doji, momentum hits the crossover. It continues to run to here. So that candle at top, the red candle tells you caution. Might be time to get out. Next candle is a flat doji, time to get out. It means indecision in the place. Okay, if you would have bought at the open and then bought or sold out up here, nice little profit for the day, under $1. But if you throw in enough money, you can run that. Same pattern again over here. It drops down. This is where you would have sold out at your peak. It drops down. Once it crosses over again, what candle are you dealing with? You're dealing with a long bear candle or bull candle, excuse me. Next one up, you can make another little bit of money. This is picking and choosing during the day. This is the same basket of stocks that you're going to see in the S&P 500. You can see the same pattern with that. You can see it with the triple Qs. You can see it with all of the indexes. Probably take that off and give you more space. But if you follow the RSI, here you go. It starts crossing down. What do you have? You have a doji up top, right? Same thing. Come over here. You got a long green candle. It pops up. Over here, 2 red candles in a row telling you get out if you're in. Green candle again. Whenever it crosses over, it's indicating to you whether it's going down or up. You can run this on these indexes all day long. You can do this with the SPY. The dark area here is the after hours market. That's your indicator. What happens in the pre-market tells you what's going to happen during the day. That's your algorithms going out and saying, hey, close at X, go do Y. And you can see the pattern. You know, well, today is a bad example. The close yesterday was a long candle, buy. Where's your RSI? Heading north. But that becomes invalidated because of the news.
Hmm.
Bam, down. Okay,
So
go ahead.
what do you do here, Mike?
Well, you use the pre-market as your indicator. If you got
Okay.
some steel balls, then you can go into the pre-market and buy. But I highly don't recommend doing that. You can get your face ripped off very easily. Liquidity is never that good in the pre and post markets unless it's a hot security or
News.
volatile security at the time and there's a lot of interest in it. Or
So,
anyway,
Mike, let me ask you this.
sure.
So we see this drop because of the news event.
Yep.
We watch the RSI in this case as we enter the open.
Yeah.
Is that
Yeah, you're going to see the same thing. It's going to follow the same pattern. You use your 5-minute
Okay.
chart only, use your RSI, change your parameters of the RSI to 15 days. Okay.
okay?
Don't use the close. When you go into RSI, change it to OHLC divided by 4. It's open, low, high, close. It's just the data points it picks to calculate out the average and the momentum. So that's your mean basically is what it's showing. Anyway, with the markets acting the way they are, you can make a living off of these indexes by following this. You know, if you got real balls, you can short it. If you see the market going the other way, you can short it and you just do it the opposite. But as you can see here in the aftermarket, you crossed here and it stayed above until here, which is approximately 590.5. And where were you here? Approximately 597. So you throw 1,000 shares in there for an hour, 2 hours, 3 hours, you can make some decent scratch. But you have
That's a
to pay
chunk of money.
attention. If you do,
Yeah, it's day trading for sure. It's not.
it's day trading for sure. If you
Yep.
do, you set 1 standard deviation below a trailing stop. Let it run. When it gets up, you see the candle on the 5-minute, tells you what to do. You see a doji like this, what's it telling you? Indecision in the marketplace. Indecision, what's the next candle going to be?
Down.
That tells you get out.
Yep.
Spread, run.
Can I ask
Real
a
simple.
question? On your settings?
Yeah, David uses the same kind of thing. He uses RSI.
Yeah, I'm very interested in the setup. On the smoothing line, are you using 15 unit
15 days.
for both the smoothing and the RSI?
No, RSI only.
What about the smoothing? Your gold line?
No, that's based upon 15 days. You're changing the
Okay, you're
parameter
using
of
15.
You're changing the parameters within the RSI. You're
Right,
changing
but
it
I'm
from the
saying you're
close.
using
It's going to
15
default to
both.
close in 14 days. So you change it to 15 days. You change it to the OHLC divided by 4. Okay. If you add in any trend lines, like if you want to see where, you know, with this, I wouldn't use a 9, a 20, and a 200. I'd use a 3, a 5, and an 8. Shorter term, tighter. That also would give you an indicator. The less you put on your screen, the better. It is follow the KISS principle if you do this. Anybody uses Thinkorswim from Schwab, there's a paper trading aspect to it. You can sit there and play with this all day and night, any day of the year that they have in their database, and see how it works. Markets generally are, the algos are buying in the pre-market. The stock rides for an hour or two and then retracts and then repeats and then retracts. Once you see this on your charts and you look at the indexes, it'll stand out like a sore thumb to you. So again, use your pre-market to tell you what's coming. You know, in this case, it's a bad day to show you this because we had the sell-off due to the news. But if you went back and did it the day before, there you go. And here in the pre-market on these 3 green candles going up, stayed in and rode it up and then got out up here. Probably at that doji, that green doji or blue, blah, blah, red doji. Which would have been, come on. 603.18, but if you got in back here at the second green doji, 598.
And that's right where it crossed the RSI.
That's $5 per share. You do 1,000. Any mathematicians out there?
1,000 times 600
$5,000
bucks.
This
1,000 shares.
This pattern has been repeating since Powell spoke in December. If you notice, when Powell spoke, that was the market high. That became resistance. The market is not passing those. It retreats after it, after a day or so. Same pattern. What are they doing? They're creating liquidity. This is the market makers playing with you. Send in the pre-market, they set the stage to buy. Everybody piles in. The market opens, every retail trader buys in. 5-minute candle is all you, or 5-minute RSI is all you need. It's simple, but it takes discipline. I was telling Mark years ago, I learned of this play that really, really takes a lot of discipline and remembering. Every month, the indexes change on the last day. First day, everybody has to rebalance, okay? It's compliance of their model. They have to stay within certain parameters. So if you buy on the open, the S&P on the last day of the month and sell it on the close on the first day of the month, you should do decently because you're going to see it's like options day trading. Well, where are the options? If they're puts, everybody's got to buy to cover their puts. The market goes up. Guess what? It's a buying opportunity because the market has to go up because everybody's covering their option positions, meaning they're creating demand. That's simple. When you cut out all the clutter, it stands out at you. It jumps out at you and smacks you in the face. You can use this on any stock you want. If it's volatile, this is what you want. You might only be in it for 3 ticks, but then again, you might be in it for 20. Then again, you might get sold out on the next tick. You set your stops 1 standard deviation below and let it run with a trailer. If you miss it, it'll hit. Rule to follow with this. No more than 4 positions. You're going to get lost if you do. And even if you're starting out doing this, don't open more than 1 until you feel comfortable.
I would use that paper trading, to practice when you suggest, Mike, because it's easier for you because you've done it, but you need to practice and get that feel.
Exactly. It's a matter of understanding what you're seeing in the chart. You don't need a 9. You don't need a resistance line. You don't need anything but the 5-minute chart and the RSI. Tweak the RSI, open, close, or open, high, low, close by 4, 15 days time period. The extra day smooths it out because within any 2 weeks, the probability of it going further is down to next to nothing. The extra day gives you a little bit more continuity across. Very simple, but it takes discipline and watching it and understanding and not getting confused between the pre-market and the actual market where you are in the marketplace. But in this, I mean, that trade there yesterday, $5 a share.
Mike, does this apply outside of, say, to options?
No. I mean,
Okay.
you could trade options instead, but no, don't.
Stick with stocks.
Not doing this on a day trade, unless you want to protect yourself with a put or something like that as a protection, downside protection. But if you're going to use a trailing stop, why bother?
Right.
You don't need to. Why take the extra expense and the extra risk?
Okay.
If you marry an option to a swing trade, like a protective put, so if it goes south, at least you pulled in some premium, you're good. But again, that adds complexity to it. The more complexity you put to it, the harder it becomes because, face it, you're gonna forget. It happens to everyone unless you're doing this day in, day out, over and over and over and over and over again. The more you do something, the easier it becomes. It's really quite simple, but the way that the markets are moving right now, that you can do very well with just trading the indexes, watching the patterns, and then trading. If you're in an IRA, you can't short.
Shorting's a whole different ballgame too.
But as long as you set your stop properly, you're good. What I would do if I pulled in the pre-market and I bought in at this doji here, make this bigger for you. If I would have got in here after I saw the second one and it was confirmed that it's a positive move, great. I'd set my stop down here. 598.40. I would have been getting in somewhere around 599. And then I would have ran it all the way up to this doji here, 603.21. Market pulls back. This is the liquidity grab. This is your market makers. They're pulling in the liquidity. They're pulling in your money because you're sitting there waiting for the thing to continue to run. That's their game, guys. Same thing here. Long candle. Well, in this case, news changed it. That changes you. What do you do? In this case, short. Boom. You would have shorted it and you would end up down here. You would have sold out. Hello. Talking 602-ish, right? You would have saw that. You would have got in somewhere in the red candle here. 603.
How does that play
1,000
with
shares, 10,000 shares. You're doing okay.
how does that play with your RSI? Because at that level right there, your RSI is still above the gold line.
Still above, yes.
Yeah.
but you have news. Okay, you also have next to no volume. Volume is an indicator. So when they opened, the volume went through the roof.
As it does a lot.
Yeah, like I said, use the pre-market as an indicator of what it's going to do. Do not enter the pre or post market without having an idea what the hell you're getting into. Your risk goes up exponentially. But
So, Mike, looking at today, how would you interpret what's happening right now?
as of right now, I wouldn't touch it with a 10-foot pole.
Yeah, I would be on the sideline.
No
Yeah,
shit.
there's
Okay.
just
Just
way
wait.
too much uncertainty out there to be doing this. Like I said, this is a bad time to show you this, but
Yeah, I
it
mean, this is just one of those unknown market conditions that comes up that can
comes out of left
totally
field.
totally take you off your plan, your program,
Yep.
and you know
Yep.
it's okay not to be in it. And
But again, that's what the pre-market is telling you. It's telling you, do you want to do this trade today and follow this one or not? In this case, I wouldn't touch this. Your pre-market is basically flat, up a little bit, down. What's your RSI doing? It's down. Market's going to open down. Unless these crazy retail traders think this is a buying opportunity.
so I appreciate that, Mike. So again, we've just to not confuse everyone. This is a 5-minute chart, shorter time period. Got to be kind of on it. What I do is longer term swing trade. Okay, and I use more indicators than Mike does here because Mike is getting in, getting out. He could be in and out within 5 minutes, or he could be in and out within 15 minutes. On a swing trade, you could hold swing trades 2 days, you can hold it 2 weeks. Okay, so there's different plans that you have. Then what Trent talked about, Trent was talking about more of an intermediate investment style. So when you have a mind frame of what you're going to do, make sure you stick to the plan. If you're going to do what Mike just showed you, stick to that in your thought process and don't look at it as, let's say this was an individual stock that we were talking about. Don't say, well, this is a really good stock and I'm gonna keep it because of this, because you are day trading it. You're not investing in it. Same with
Yes.
swing trading. Okay.
Yes,
Same with
you're
swing
not
trading.
investing.
I'm not investing in it. I don't even know what a lot of these stocks do. If I'm an investor, and I've told you what I invest in, I'm intimately in knowledge about what they do and what they're going to do. But even a day like today on the best company will take it down. And the tide goes out, just about all boats will be lowered. So just be careful. Think about that, because I know the thing that worries me the most is that we talk about so much, and then you have an account and you're trying to be an investor, but you're using maybe day trading or swing trading type technicals, and it gets all confusing, and it's different. And we've talked about, you're an investor, use a long-term indicator, the 200-day moving average, the 50-week moving average. If you're a day trader, use the 5-minute, use the RSI. So
One of the first things I learned in economics, Mark, was when you talk about supply, only talk about supply. When you talk about demand, only talk about demand. Well, what does that mean, Professor? Don't confuse yourself with two completely opposites. Don't take in too much. Follow the KISS principle. Keep it simple, stupid. You follow this in this market. If it stays like this, you can do okay. Remember, it's risky. Your risk goes up exponentially because you're changing your time frame. Okay? Now, again, ITOT, it's the same pattern. See down here, there's a doji down here somewhere in the pre-market. I think it's under this line. But again, rode up, sold off, consolidated, rode up, sold off, rolled up, sold off, rolled up, sold off, rolled up, sold off. Follow what the market gives you. The 5 minute gives you that window. What's going on within that short window? You sit there, you watch the candles start moving before it becomes a firm candle and moves on to the next one. Tells you what's going on there. You don't have to get into the minutia of every tick out there. What is the volume? How high is your volume? Are they trading, is it each one of these candles 100 shares or 100,000 shares? Know the volume, and that tells you how much play you have. If there's no volume, you might get burned really quickly because there's going to be a wider range between your bid and your ask. And if there's news out there and that bid becomes wider, you're exposed. Don't use limit orders, hard stops. Recommend trailing stops. Figure it out by dollars. How much is that one standard deviation? In this case, it's probably 30 cents, 33 cents, something like that. If it starts running on you, you want to tighten that, great. You want to loosen it, great. If you're up $10 on the share, loosen it, because it might come down and then bounce back again. You're always playing with the resistance and support, especially during the market sessions, 9:30 to 4. Watch 2 o'clock, that's your algos. 9:30 to 10, retail's jumping in. Take their money.
That's Eastern time, right?
Eastern time, yes.
Okay.
I keep forgetting you guys are out there in the middle of nowhere land.
Yeah.
Yes.
Can I show a different perspective?
Yeah, go
Right.
ahead.
I need to screen.
Can't have it. Mine.
Oh my God.
Mine.
He's taking it over.
There you go.
So, and that was on a short-term 5-minute chart. Okay.
Yep.
And that's what Mike's showing you. Now, not to be confused with the daily chart of ITOT. Okay, Mike is talking about getting in, getting out. You could be in 5 minutes, you could be in 20 minutes. In swing trading, you watch different things. Okay, you might have used the same kind of indicators. You do have the RSI, but I use others. As we cross over the MACD, we've crossed over the stochastic, and we've crossed over the 9 on a swing trade. You might get into ITOT here and run your way up, okay, until you get past the 9, and then you get out. You may, as you know, and you'll be in it 3 weeks as opposed to Mike's 15 minutes. Okay. Or
So
you're an investor, and the investor says, I'm going to wait until it gets above the 200. And so you get in here. Okay. So you're in at 125.73. You've come, you didn't get below full candle. You still ride it up, and now you're at 131.90 as an investor. Okay. Because you're using the 200. So we just saw 3 different ways: investing, swing trading, and day trading, using different methods of techniques, okay, and different technical indicators too. So keep that straight in your mind. Are you an investor? Are you a swing trader? Are you a day trader? And use the appropriate technical indicators.
Hey, Mark, a little spin on that for you. If
Go
you
ahead.
pull up the chart again.
Okay, hold on.
Come on, get prepared, man.
I was prepared. I was done talking.
Excuse me.
Okay.
Where were you hypothetically saying to get in here? Anywhere
Well,
above?
I would say I have a trading plan. You can go look at it.
And you would be
Okay.
in up down here, right?
So here's where we go across the 9, which is
Mhm.
kind of my line in the sand on a swing trade, 9-day. I'm on a daily chart.
Right.
Okay, I've come up, I've crossed the MACD, I've already crossed the stochastic, and I'm coming up to about 50. You could wait until you hit 50 the next day and get in if you wanted to.
So,
Okay.
but you're hypothetically saying get in around here, correct?
On my trading plan.
Yeah. If you ran it with a trailing stop, and as you went up, you widened your stop, you would allowed it to come down and continue to run.
Mm-hmm.
So there's another variant for you on your trading platform.
Yeah,
So
I mean,
it's
we always
taking
say,
mark and expanding it out by using a different style of stop.
yep,
And as you go up and make profits, widen your stop.
yep. And that's what we say, you get ahead, make sure you don't, once you're ahead, you should never lose unless you have a day that it just collapses below your stops, and it's going to open up
Like today.
like
Like
today,
today.
like today. Oh, but again, it's three different systems, and then Trent on what he's doing with Kerry is a totally different thing. We're looking more fundamental on that. Okay, but here you've seen three systems that all try to get you the probability of a good trade or a good investment using different indicators and some kind overlapping indicators, but different time frames. I appreciate
Julian, you
going
had a
over that, Mike.
question.
Go ahead.
Hello guys, how are you? Yeah, my
Good.
question was for because the pre-market price, but I think I answered my question just 1 minute ago. So, because when I started the day, the pre-market price for AES, the corporation that we were watching today, the energy company. So my trailing stop was in a trigger price about 11.31, and but now I don't understand because before the pre-market it was in 11.31, and when the market opened, um, the fill price was 11.42, but I was with the trailing stop.
What's the symbol?
AES.
Yes,
AES?
yes,
We've been doing a swing on
and
this one.
yeah, and I was checking like Moodley say about the pre-market price. I was with the trailing stop since Tuesday, and my trigger price was 11.31, but today the fill price was 11.42. So it's kind of confusing.
Well, you see, you're not day trading, Julian. You're swing trading.
No, no, no,
So
no, no, no. I mean it's yeah. I was
yeah.
understanding that it's swing trader.
You're
So if
saying
you
you use a trailing stop?
Yes, I was using the trailing stop, and the trigger price was set up in 11.31.
Well, it depends on the trailing stop is how much money you said or percentage you
I
set.
put, yeah, I set up 0.30,
30 cents.
30 point, yes.
And what did you get
Uh,
in at?
in the price of getting was 10.96.
10.96. Okay.
so you're up almost 50 cents.
Yes, so I already sell because the order was filled at 11.42.
11.42. And that's in the regular market, it's not going to be in your pre-market.
Right, that's right. Yeah.
Market, you have to use limit
Yeah,
orders.
yeah, but I was trying to understand why if my trigger price was 11.31 with the trailing stop, the order was filled at 11.42.
This
So
morning, right?
That's your broker.
it even was an upper, yeah.
This is
It wa-
today it happened. You got sold out today at the open.
yeah,
At the open.
at the open, yeah.
If you look at the 5-minute candle, it's huge. Okay, so what does that tell you? It goes from the bottom of the wick to the top of the wick is your price deviations within that
Okay,
5-minute period. Okay, see the long candle Mark's got there on the right?
yeah,
Price went from the top at 11.50 approximately down to opened at 11.32.
right,
It could have spiked all the way up to 11.50 and then retreated down. Being as you set yourself a 30-cent stop, if it goes within that 30 cents, it's going to kick.
yeah,
And that's what happened with you.
So you were up approximately 50 cents, and you put your stop 30 cents below, right?
yes, I can check it.
Okay, and then you see what happened at open because this is a different day because we have news. And again, this is the 5-minute chart. So if you're trading on a daily chart, you want to set up your parameters for the daily chart to get in and out. I personally don't go and buy on the daily chart and then go to the minute chart and try to get out on it. Because my oscillators go for daily charts. The 5 minute that Mike uses, he uses the RSI and volume. That's it. Okay. But
Yeah,
even on my 5 minute chart, I see, a lot of my oscillators have signaled it out,
yeah, to be accurate with the price that I'm checking right now, yesterday the last price was 11.54. Today the pre-market was 11.31, and my trailing stop was 23 cents. It's why my trigger price was 11.31. I can write it in the chat if you want.
And you were
Um,
using this as a swing trade? This
uh,
something?
it was on a daily chart, Mike.
Yeah, but he was making a swing on this.
Right. And he had a
yes,
swing. Yeah.
yes, I get in on Monday and I get out today with I will let you know. Yes, 46 cent per share. 46 cents per share.
So you made money.
Yeah, I make money, yeah.
Okay.
Yeah.
That's always
All
a good
matters,
thing.
right?
That's a good thing.
Yeah, that's a good thing.
Yeah.
And yeah, one of the things I was doing is trying to get out before weekends.
Yeah. And that's my philosophy. You don't need to take it, but because what's going to happen this weekend, I don't know.
Yeah.
But you look at this just on a daily chart, you swing up, like Mike said, we hit resistance, you swing down, get above the 9, you swing up, come back below the 9, you're down, you're out. Now we swing up. Okay. That's how I do it on a daily. Mike just does it on a 5 minute chart, and he uses different, he puts more emphasis on the RSI.
But
Okay.
The Bollinger Band is telling me that it's converging.
It is converging. Yep. That's what you're seeing right here. Okay. And
Remember,
that's
Bollinger Band is giving you 2 standard deviations.
absolutely from the mean.
And only for, most likely, you probably have it set for 20 days. So it's only looking at a 20-day period.
Right.
Okay. To use these tools, you need to know what they are and how they work to understand how they calculate out this stuff.
And I have those defined. I have those defined in the trading guidelines. You can go see them.
So anyway, this is only one thing that you can use in your toolbox. Okay. You can
Well,
apply the RSI across in looking at it. You can go to the 15-minute, the 2-hour, the 4-hour, the daily. Don't go any lower on the RSI and use that.
So the way that I was understanding the Bollinger Band was like if they are converging, we have less volatility and the price can go down. That's the thinking or not?
well, Bollinger Bands, when they converge and go sideways, let's look at this. Let me put this up. I know we're running late, guys. Sorry. But let's look at United Health. The Bollinger Bands have come down and converged and are sideways. Okay. Until something comes to make that burst over. And people have different systems. Some people just trade Bollinger Bands. Okay. As long as it runs up, I'm in. Okay. Or it touches and then I get out, comes back down, and it goes back. I mean, some people use MACDs. And then when it crosses the MACD positive, I get in. When it crosses negative, it's up to your system. But in these Bollinger Bands here, we started to see a little bit of a tick up, but it went up to the Bollinger Band and found resistance. Okay. And you only trade on average 5% of the time on a daily chart outside of a Bollinger Band, either up or down. Okay. So 95% of the time, your price action is within the Bollinger Band. Okay. And when you converge like this, you can go sideways for a long time. The volatility is down. You're not seeing, you're not seeing this big drop like we saw here. Okay.
That was a
Look what
news
happened when
event.
this dropped. Look what happened to the Bollinger Bands. I mean, boom. When it was going up, you got upward momentum. Bollinger Bands are moving apart. Okay, so it's not just one thing to look at. It's for me. Okay, and this is my system. I look at 4 moving averages, 3 oscillators in the Bollinger Band plus support and resistance, and that's how I use it. I've written it down, and that's what I use.
Yeah, just one point to make about that. If you had the TTM Squeeze Pro, it would tell you visually at that point where it's squeezed, whether it would be going up or down. You'd be able to buy.
Well, I can also look at the MACD and see if it's going to go up or down too. Yeah. I mean, so again, it goes back to what you're comfortable with. What I do is what I've done, and I've done it over the years, and I'm comfortable with it, and I make money on it 75 to 80% of the time. Okay. And then on the downside, like when it runs down, I don't let it run past 2%, and that's my run. Mike's talking about a standard deviation is what he uses. Okay. So again, it's a system that and we've come up with these systems by studying it and doing it for years. Mike's done his for years. Okay. I've done mine for years. Does it fit everybody? Absolutely not. I have a low risk tolerance. Okay. I don't jump into things that I don't want to lose money on it. And that's why I'm trying to be cautious with you guys as you're learning this. And a lot of you have taken what we started out with and made the system your own, which is perfect. There is no right or wrong system. It's your system.
I think what both Mike and Mark have reiterated is practice, and practice with fake money. Open a paper trading account and practice with it, because as you get a good feel for your strategy, if you're trying to approach it from a swing trading or a day trading standpoint, just become really fluid with it and understanding, like both of them have said. So opening a paper trade account, and I know you can do that with thinkorswim. I don't know if you can do that with Fidelity, but it's a good way to start.
Highly recommend thinkorswim. I recently just moved over to Schwab from Fidelity because there was problems with their level 2 giving you wrong prices, executing at different prices. And they say, oh, it's not a problem, it's you. Okay. Thinkorswim is basically set up as a professional tool. You have news right there. You have the ability to trade, chart, options, the whole 9 yards. Everything is consolidated. You get good news feeds, unlike Fidelity. Now, when you try going into the news, it blows up your computer because it sucks too much resources. It gives you a much better program.
I have thinkorswim too, Mike, but it's a heavy lift on learning it.
Yes. Yeah, that's
so
the downside to it, but it is more professional.
When you figure it out.
That's why it's heavier in that respect.
The heavy lift.
I haven't had the problems on Fidelity that Mike has. Okay. And I used to work at Ameritrade, and we developed thinkorswim. So I understand thinkorswim. I was there when we developed it. When Schwab bought Ameritrade, they used their own platform for a while and people hated it. And so they switched back to the Ameritrade thinkorswim. I haven't had the problems in what we're trying to teach here. That's why I use this chart and this program. You can use whatever one you want. A lot of people use TradingView, which is fine. You can set up the charts the same way. It's just whatever you're comfortable with. But I'm going to continue to use Active Trader Pro because I've been using it forever. I have all my accounts linked to it. And this is how I've been doing it for 5 years for Kerry. So
okay,
I'm
Mark,
not going to
so
switch.
what are you saying? You can't teach an old dog new tricks?
I don't know. You're an old dog. You
I learned new tricks though, man.
Yeah, but I'm not going to switch it in the middle because I've got too much invested in this right now. And too many accounts tied together.
I think this everybody has their own. You got to figure your situation out.
Absolutely.
And
Absolutely.
that's where practicing, that's trying new things. That's I like this, Mike, what you shared, because it's a different look. It's a different look at how to make money. At the bottom line, that's what all this is about. If you're more a swing trader, there's totally opportunities in that. If you're more of a juiced up, want to day trader, what Mike introduced was, I find it very interesting because it gives you a better understanding about how Wall Street works, how the institutional world works, and you can take something from everything. It doesn't mean you apply it, you mold it into what you do, and I think that the bottom line, that's what needs to be taken from all this. So,
Well, you know,
so yeah.
I have TradingView, I have Fidelity, I have Schwab, you know, Thinkorswim.
You got too
You know,
much
'cause
money.
I don't leave everything in one place. That's what I've learned.
Yeah,
Those are lessons learned.
yeah.
So I have it spread out. I use all of them, but I was just commenting that Thinkorswim is a heavy lift.
It
I'm
is.
struggling with learning it
Yes.
myself. I've learned something, I go back and I forget. I have to go back and relearn it again. It's not fluent. That's the thing. And you know, unless you're doing it every day and you're working on it every day, then it becomes fluent. You know,
Schwab will give you 30
just by
days free
default,
use of it.
right? Yeah, it takes time. It's just the same thing. When I learned TradingView, it took me a while to learn that, and then now I know it for most part. You know, resetting things and tweaking with them, I have to plan for a weekend. You know.
Yeah, I guess when I look at it, no matter what you use, Yahoo Finance or
But
whatever,
they're
can
all
still
good.
you
You know,
can
depends
yeah
on
you can
which one.
you can still put in your moving averages that you want. You can put in the oscillators that you want. You know, they you know, you can do the same thing on the same chart on different charting programs.
I understand though what Mike is saying. It's everything right there at your fingertips. But you know, everybody has to you know, do whatever they're gonna do.
Just.
All right, we're
Schwab
gonna
will give
wrap
you
it up.
30 days free for using Thinkorswim if you want, before you have to open or fund your accounts.
Cool. All right, we're gonna wrap it up there. Thank you, Mike. Thank you, everybody, for participating,
thanks,
because
Mike.
this has been very educational, and that's what this is all about. So, from Mark and I and the rest, everybody have a great weekend. Kerry will be on at 3 o'clock today, Central Time, 4 o'clock Eastern. You should receive a link in your email, as well as there's one on the website and the Discord as well. So have a great morning and afternoon. If we don't see you at 3, we'll see you
Happy
next week.
Father's
Have a
Day,
great one.
everyone.
Yeah, good session, guys.
Yeah.
Thank you.
Have a
Happy
great
Father's
Sunday.
Day, guys.
Bye.
Thank you,
Thanks,
guys.
Take care.
All
Take
right.
care.
See you at
Bye.
3. Bye.